Hi, hello everyone. Welcome back to my channel. In this video, a problem is solved on preparation of statement of income and expenditure and statement of assets and liabilities. Kindly watch the video till the end, like it and share and subscribe the channel. If you have any comments about the video, please put your comments in the comment box. Now, let's move to the whiteboard. This is a problem on preparation of a statement of income and expenditure and the statement of assets and liabilities. The problem is like this here. Ajay and Vijay, let me stretch this here. Ajay and Vijay are partners in LLP. They share profits and losses in the ratio of 2:1 on 1/4/2010. Their capital balances were rupees 50,000 and rupees 40,000 respectively. Following information is extracted from their books of accounts for 10 years ending 31/3/2011. So let me insert two columns here. So particulars rupees. So purchases 50,000. Sales. So purchases it is a 50,000 here. Sales rupees 1 lakh. Opening stock rupees 30,000. Wages 10,000. Salaries 10,000. Machinery rupees 20,000. Furniture rupees 10,000. Printing and stationery rupees 5,000. Then debtors rupees 80,000. Creditors rupees 60,000. Cash rupees 20,000. Drawings Ajay, Vijay rupees 10,000. $5,000. adjustments, outstanding wages rupees 5,000, depreciate machinery and furniture rupees at 10%, create RDD at 5% on debtors, allow interest on capital at 10%, closing stock rupees 30,000, you are required to prepare statement of assets and liabilities and statement of income and expenditure under the provisions of LLP rules. So now let us go for preparing this here. So solution, LLP's statement of income and expenditure for the year ending 31/3/2011. So let me insert 4 columns here. Particulars, rupees, so now let's start here. Incomes, in that A, sales, directly will go here. Sales are given rupees 1 lakh, then B, other incomes. So in this problem there are no other incomes here. Then when it is comparison of opening stock with the closing stock, there is no any neither increase nor decrease here, so let us not take here. Then now the difference here, it will be 1 lakh, then next less expenses, in that A, purchases. So we have given purchases as rupees 50,000. Purchases are given as rupees 50,000 here. So let me write directly here. Then B, need to include one more column here. So purchases is over now. Next, B, personnel expenses. In this we have got wages. To this we should add outstanding, then salary. So now let's go for wages. Here it is given as rupees 10,000. To this we should add 5,000. So let me underline this here. 15,000 will be the total amount of wages. Then salary, let me take here 10,000. So let me underline here. The sum of this will be 25,000. Then next, C, administrative expenses. Under this here we have got printing and stationery. So there is no any outstanding or bill in advance, so directly I will take here that is rupees 5,000. Then the next one comes here, selling. So in this problem there are no selling expenses. Then next, E, depreciation. So depreciation machinery. So the rate of depreciation is 10% here. So 10% of rupees 20,000, which comes to rupees 2,000. Then similarly, furniture, that is also 10%. So 10% of rupees 10,000. So here it comes 2,000. Then here it comes rupees 1,000. Let me underline this here. So the total depreciation will be rupees 3,000. Then the next one comes here, F, interest. So interest on capitals here. So now Ajay, so the rate of interest here is 10%. 10% of rupees 50,000. Then Vijay, 10% of rupees 40,000. So now let's take here. So 10% of 50,000 comes to rupees 5,000. Then Vijay's interest in capital will be 4,000. So let's underline here. The total interest on capital will be rupees 9,000. Then next, G, other expenses. other expenses under this here RDD. So RDD is given as 10% here, so 10% of debtors. So value of debtors is given as rupees 80,000, so which comes to rupees 8,000. So I will take directly here. $8,000. So when the sum of all this, so let us take the total to the outer column here. So 50,000 plus 25,000, 75, 80, 83, 92, 1 lakh rupees. So here it is, total is 1 lakh. So there is PBT, that is a profit before tax. Before tax is nothing is there. Similarly, then when profit itself is less here, even there is no question of payment of tax at all. So profit before tax, profit after tax will be totally nil only, and even partners will not get any their share of profit, as the profit itself is not there. The next one comes here, statement of assets and liabilities as on 31/3/2011. So let me insert the columns here. So particulars, rupees, so now let's proceed with the A, partners contribution and liabilities. So here 1A, partners contribution, so here we should take, so now Ajay's capital, to this we should add interest on capital. From this we should deduct less drawings. So now let us take Ajay's capital is given as rupees 50,000. To this, when we add interest on capital, it will be 5,000. So let me underline this here. So the sum of this will be 55,000 when the amount of the drawings made by him is rupees 10,000, so which is subtracted. So the difference here, it will be 45,000, which shall be taken to the outer column. 45,000. Then Vijay's capital, to this we should add interest on capital less drawings. So Vijay's capital is rupees 40,000. So here 40,000. When the amount of interest on capital is rupees 4,000 here. So 4,000. When the sum of this will be, so here it is 44,000. when the amount of the drawings made by him is rupees 5,000, which shall be subtracted here. So let us underline here. So the difference, we shall take it to the outer column here. So the difference here, it will be 39,000. So 39,000. So when sum of this, when some of these two capital balances are taken, it will be now 45,000 plus 39,000 comes to 84,000. Then the next one comes here, number 2, general reserve. Of course, there is nothing in the general reserve here. Sorry, this is B here, not 2. General reserve. Then number 2, it is liabilities. Here A, secured liabilities or secured loans. B, unsecured loans. Then C, short-term borrowings. D, trade payables. So under here we have got creditors. So now here we'll go for working out this. So secured loans, they are nothing here. So directly I will write here itself, as there are nothing here. Then secured loans are not there. Then similarly unsecured loans are not there. Then short-term borrowings are not there. Then trade payables, here it is given as rupees 60,000. Then E, other liabilities. So under the other liabilities, we have got outstanding wages. There is only one item here, so I will take directly to the outer column here. 5,000. Then F, provisions. So there are no provisions in this problem. Now the sum of this will be the total here. So 84,000 plus 64,000 plus 5,000, that comes to 1,49,000 here. Now let us go for the assets here. So let's call this as B, assets. In that A, fixed assets. So under fixed assets, we have got machinery less depreciation. Then similarly furniture less depreciation. So now let's fill up the values here. The amount of machinery value is given is rupees 20,000. So 20,000 less depreciation will be 10%, means it will be 2,000. So that is underlined here. 18,000. So 18,000. Then the value of furniture which is given the problem is rupees 10,000. Less depreciation is 1,000. So here it will be 9,000. 9,000 when the total of the fixed assets is taken here, it will be 27,000. Then the next one here, B, investments. In this problem we are not given investments. Then loans and advances. Next, D, inventories. Under this we have got a closing stock. Then E, we have got trade receivables. Under this we have got debtors less RDD. So now let us fill up the values here. So investments, nothing is there, just put dash here. Then similarly advances, there nothing is there, let's put dash. Then the closing stock, it is given as rupees 30,000. Then debtors here, so value of debtors which is given the problem is rupees 80,000. So 80,000 less RDD 8,000. So 8,000, let's underline here, it comes to 72,000. 72,000. Then the next one here, F, cash and cash equivalents. So cash in hand, that is given as rupees 20,000 here. So now let's take the total here. So 27,000 plus 30,000 plus 72,000 plus 20,000, that comes to 7 plus 2 9, 7 plus 2 11, 11 plus 13. The sum of this will be 1,49,000. So let us make the board of these things here. So this was a very simple problem on preparation of assets and liabilities. If you have any questions to be asked, please put your questions in the comment box so that I can answer. I will try my best to answer to your questions. Of course, the chapter is very simple here. I have tried my best to explain the things in a very simple and lucid language here. Hope the viewers don't find any difficulty in understanding the concepts and all these things. So this is the sum, the total of the liabilities very simple problem it was. So in this problem we have not arrived at any profit or loss here, so that's why we have got only the profit before tax, that's all here. So as itself is a 0, so there is no question of payment of any tax by the LLP. So in case of the LLP, it is taxable as per Income Tax Act at the rate of 30%. So whenever you find profit, it should be the tax should be allowed at 30% here. Here there is no profit before tax here. We are not continue. I am not continued the next as less tax. There is no meaning here because the PBT, in short, what we call as a profit before tax itself is 0. So there is no question of any payment of the tax by the LLP here. And even in this one there is no neither increase or nor decrease of this tax here. Just I will simply align it. So here the LLPs does not have any profit or loss here. So thank you for watching this video.